Hey everyone, welcome to part 3 of the Smart Money Concepts course. In this lesson, your understanding of the chart will completely change. We're going to learn how to read price behavior, identify trends, and understand exactly when the market is continuing its move and when it's getting ready to reverse. Market structure is the foundation of everything in Smart Money Concepts. Without understanding it, no indicator, no order block, and no other analysis can truly help you. That's why this lesson is one of the most important parts of your professional trading journey. So, what exactly is market structure? It's basically the framework of price movement. Every swing, every break, every pullback, they're all parts of that structure. Once you understand it, you can instantly recognize the state of the market. Is it trending up, trending down, or moving in a range? Let's start with the basics. In an uptrend, the market keeps forming higher highs and higher lows, meaning buyers are in control. Each correction becomes a new opportunity for the price to move higher again. In a downtrend, it's the opposite. The market creates lower lows and lower highs, showing that sellers are in control and every pullback is just another move down. These behaviors are the heartbeat of market structure, and learning to spot them helps us separate real trends from simple noise. The first thing you need to understand when analyzing structure is the pullback. A pullback is a temporary pause before the price continues in its main direction. The kind of pullback we study here is more precise than the usual correction. We analyze it candle by candle. In an uptrend, when a candle breaks the low of the previous one, even just with a shadow, that's a pullback. In a downtrend, if a candle goes above the high of the previous one, even slightly, that's also a pullback. Now that we understand uptrends, downtrends, and pullbacks, we need to learn how to identify highs and lows. In an uptrend, after the first pullback, a low is formed. Then, when the previous high is broken with a candle close, a new low forms again, continuing the structure of the trend. If later that low gets broken with a candle close, or with a shadow that isn't just liquidity collection, then the trend has changed. It's now bearish. In the continuation, after the first pullback, a new low forms again. And if that low gets broken by a candle close, a high is formed and the pattern continues. Next, we'll mark all the highs and lows of a full trading day on the 15-minute time frame together, so you can clearly see how the market structure forms in real time. Let's start from here. Price created a move from this point without any pullback. After that, this pullback formed a new high, and following this candle, we got another pullback, meaning this point here is a low. This low was broken by this candle with a close below it. Then again, we got another pullback here, forming a new low at this point, and this high was broken by this candle, confirming that the trend is now bullish. After that, we had another pullback. A new high was created here, and then an unsuccessful attempt to break that high, until finally, this candle managed to close above it. Now this low is confirmed, and if price closes below this point, the trend changes to bearish. Continuing from here, this pullback formed the next high. Then, this candle closed above that high, forming a new low here. After this pullback, another high was created, but when this candle closed below this low, the trend turned bearish again. Next, this pullback created a new low, and when this candle closed above this high, the trend switched back to bullish. Then another pullback formed a new high, and when this candle closed below that low, the trend shifted to bearish once more. Later, when we learn about liquidity, we'll understand that when a low is taken out only with a long wick, it's not necessarily a trend change. It's often a liquidity grab. Because when a wick is long, it usually means the market was collecting liquidity rather than changing direction. Continuing from here, this pullback formed a new low, and when this candle closed below that low, the bearish trend continued. Then, this high was formed. If price closes above the candle's high, or if it wicks above it without being a liquidity grab, the trend will turn bullish. After that, this pullback created another low, and when this low was broken with a candle close, the trend continued downward. Then, another high was formed, and after this pullback, a new low was created. When this candle closed below that low, a new high was formed, And when this high was finally broken by this candle, the trend reversed and turned bullish again. At this point, a new low was formed, and the wick that reached below it didn't change the trend. It was just liquidity collection. However, in the very next candle, the trend actually changed and became bearish. And then, this high was created. After that, this pullback formed a new low here. With this candle closing above that high, the trend shifted again and continued upward, all the way until this candle, without any pullback in between. And in this important example, when do we say that this low has been formed and price continued its trend? With the break of this high, or this high? The correct choice is this high, because it's the first high after the very first pullback. In this course, we focus on the essential and practical concepts, the ones you can actually make money from. Even within the topic of market structure, there are deeper ideas like swing highs, swing lows, internal and external structure. But the goal here is to teach you the optimized fundamentals, so you can quickly build your first strategy, start seeing consistent profits, and understand how to truly read the market. Once you've mastered these basics, you can move on to advanced topics like internal structure or anything else you'd like to explore later.